We'll wait just a moment to start since we still have people joining. Well, hi, everyone. My name is Chad Sluss. I'm the Executive Director with the National Equipment Finance Association. It is my pleasure to have you join us today. This is day 4 of the 2020 NEFA Virtual Symposium. We have a great lineup of speakers for you today. Today's presentation, Selling in Unprecedented Times. So before I get into any introductions of our sponsor today, I want to thank all of our sponsors for their support of the program this fall in October and November. Again, this is day 4 of our 4-part series. My apologies for not joining you live on the screen today. I'm having some connectivity issues at my home, so apologies for that. First of all, I just want to say thank you to our sponsors, diamond sponsors for our program, Bank Financial, Channel Partners, Providence Equipment Finance. Gold sponsors include Financial Pacific Leasing, silver sponsor, New Lane Finance, and our bronze sponsor is LeasePath. So again, thank you so much for your support. We really appreciate it and look forward to continue to work with all of you in the future. Without further ado, I'm going to introduce Dale Kluge, President of Providence Equipment Finance. His company is today's sponsor of our program, our 2 panels this afternoon, or morning for those of you out on the West Coast. Dale Kluge has been in the commercial banking and leasing business for over 39 years. Dale founded Cobra Capital in 2000, which was later acquired by Providence Bank and Trust in 2016. Prior to Cobra, Dale founded Great American Leasing Company and LaSalle National Bank's leasing business. Dale has also served as Chief Credit Officer at Link Scientific Leasing, then the largest independent medical lessor in the nation, and was the managing partner of its third-party portfolio servicing business. Prior to that, he co-founded a de novo suburban community bank for LaSalle National Bank at the young age of 29, which was later acquired by Bank of America in 2007. A 1981 graduate of the Continental Illinois National Bank Wholesale Banking Training Program and its Financial Information Services Training Program. Dale is a CPA and a graduate of Northern Illinois University in DeKalb, Illinois. Dale, I'll turn it over to you.
Thanks, Chad. PAF is proud to be a diamond sponsor of today's NEFA Symposium. Providence Equipment Finance, PAF, is a division of Providence Bank and Trust, a $1 billion community bank organization located in the Chicagoland.
Dale, you muted yourself somehow.
How about now? Am I
there
good?
You go. Yep, good deal. Thanks.
Did you get any part of that or none of that?
I would start over.
Okay, thanks, Chad. PAF is proud to be a diamond sponsor of today's NEFA Symposium. Is that good?
Yes.
Okay, thank you. Providence Equipment Finance is a division of Providence Bank and Trust, a $1 billion community bank organization located in the Chicagoland area. Providence is deeply rooted in lending to small businesses in the communities we serve and generously gives back to our communities through our stewardship program for Christian-based nonprofit groups by pledging 10% of our annual profits to those in need. PAF is the successor to Cobra Capital, a niche-oriented national equipment finance company serving small businesses across the nation since 2000. PAF continues the Cobra legacy success as an equipment generalist, which finances the equipment needs of highly successful entrepreneurs operating growth-oriented small and mid-sized businesses located throughout the U.S. We have a 35-year history of consistently funding third-party sources who originate equipment transactions in the $100,000 to $5 million range. We are a full financial statement shop and offer an app-only program for approved PAF originators. Our core 4 underwriting criteria focus on experience management, essential equipment, growing revenues, and minimum debt service coverage of 1-to-1. We are a counterintuitive and objective lender, which is distinguished by our highly successful earnings history through every economic cycle since its founding in 2000. Our trademark Solutions at Work approach to financing the equipment needs of young and growing businesses is how we creatively add value to every relationship we build for our originators, one deal at a time. PEF is a counterintuitive lender. You can go back to the prior slide, Blair. That's it. Thank you. PEF is a counterintuitive lender because we create solutions for those non-conforming credits. We are an objective lender because we fund for our own account and do not securitize. Next slide, please. Our core 4 criteria listed here show our primary credit requirements and explains our successful underwriting history and our record low loss ratio of less than 1% cumulatively over the last 20 years. Next slide, please. I'd now like to introduce our moderator, May Philpott. May is a senior leasing consultant at Quality Leasing, working from Charlotte, North Carolina. She has been with Quality for 4 years and has over 15 years of sales and marketing experience in the commercial equipment finance field. She maintains active membership in multiple industry organizations and prides herself on her extensive professional network. May earned her CLFP designation in February of 2016. She is a graduate of Tulane University with a BA in both communication and psychology, along with a minor in business. May devotes her spare time to reading, baking, practicing yoga, and taking care of her 2 amazing children, Cabell, 11, and Nancy Sage, 8. May, it's all yours.
Thanks, Dale. People, I can't really tell if you can hear me or not, but thanks, Dale. And I'm May Philpott. Again, I'm with Quality Leasing, if you can't tell from behind me. I'm a senior leasing consultant here, and I'm just going to be moderating, asking questions. I don't know that I have as much knowledge as our panelists, but before we jump in, I just want to thank you all for joining us. And of course, give a big shout out to Andre, new dad on the block, Clifford, and Stephanie Ladybug Hall, both at Bank Financial, who did an amazing job putting together this NEFA virtual symposium over the last couple of months. So thank you both. Great job. And basically, if you're here to learn a little bit or contribute, the panelists here they're people from our community that have been doing sales and marketing a long time and have some ideas, and they've certainly been able to maneuver during this, as we say, unprecedented time. But we are definitely amenable to answering questions as we're going through this. So feel free to enter questions into the chat, and we will try and field as many of them as we can. Without further ado, I'm going to introduce you to your panelists, ladies first. So panelists, please join us. Please meet Leslie Farmer. She is the Business Development Officer, Hustler, Queen Bee, and Sales Guru at KLC Financial. Leslie, do you want to tell us a little bit about yourself and your experience here?
Sure, thank you, May. So I've been at KLC for 15 years. Full disclosure, the FedEx guy is going to come to my door. My dog's going to freak out in about 2 seconds, but I've been at KLC for 15 years, and we are primarily a boutique type finance company. We look at every deal one-off transactions, and we partner with a lot of community banks throughout the Midwest and throughout the country in providing true equipment financing and leasing deals of all different calibers and different industries.
Thanks, Leslie. I'm going to next introduce Corey Dam. Y'all excuse me, I have a child in the office who's apparently not on mute. Corey is VP and GM of Marketing and VP and GM Marketing and Restaurant Finance Group at Time Payment. Corey, please tell us a little bit about yourself.
Sure. So it's coming up on 15 years in equipment finance. Have built businesses and kind of vendor-focused origination businesses and fitness, trucking, the QSR space, and most recently within the group at Time Payment in our restaurant vertical, which is all things, anything that touches restaurants. So from our franchise business to vending machines and everything kind of front and back of house. It's funny watching you look like you're spotting a fly, man.
Sorry, I'm trying to get my daughter out of here. Excellent. Well, thank you, Corey. Welcome. And thirdly, we have Guy Salinka, who is owner, vice president, and resident BA at Streamline Financial. Guy, you want to give us a little bit about you?
Yeah, no problem. Thanks, May. Streamline Financial is the company I represent. Been here about 16 years. Been in the industry for 20 years. Throughout that time, really haven't deviated too much from our main core, which is working almost exclusively through vendors to generate our leads. And we focus on construction, financing, work trucks, and transportation. Mainly small ticket lender. We don't do too much over about 250 grand, with our average ticket size probably falling between 50 and 150,000.
A guy, I can tell you're a Patriots fan.
Yes. Don't do that to me here, Corey.
Thanks, guys. So I'm going to jump in with our questions. So like I said, we've kind of talked about some stuff that we thought would be important to talk about. But again, attendees, if you want to enter things into the chat, we will do our best to field those as well. But starting with the overall, just kind of giving us a picture of the environment, what changes, positive or negative, have you seen across client, which would include customers and vendors, clients and industries since the pandemic started? And of course, what are you doing to deal with or manage those changes? Guy, I'm going to let you start with that one. So what kind of changes have you seen across the board?
Well, mainly it's, I think like all of us, well, I shouldn't say that, but COVID has affected all of us in one way or the other. So with us, we have seen an influx of applications, not necessarily good quality applications. We're still closing a number of deals, but again, to get to the good ones, it takes a little bit extra work. So we've had to put some screening processes in place on the initial call interview, just to make sure that the calls that get through to the salespeople are being filtered. So we have a series of questions that we typically ask, and we always do fact finding and data gathering, but we're just diving in a little bit deeper to make sure we're not wasting anybody's time. But for the most part, the business in our sectors has been still pretty strong. We're not breaking any records this year, but we're definitely running some really good numbers throughout 2020, considering the environment that we're in. So we've just learned to adapt and accommodate our customers and our vendors the best way possible to change with the environment that we're in.
Awesome. Leslie, how about you? What changes have you seen, and what are you doing to adapt to that?
So similar to what Guy said, we're seeing a lot more applications. I think we're doing a lot more smaller deals than we typically have done. So our quality is probably similar. I mean, you have to sift through some of the bad to get to the good, but quantity is up. I would say our deal size is down. We are requiring a COVID statement with every customer. Tell us where you are, where you project to be, how COVID's affected you, just so we have, in their words, how they're feeling they can get through this. I would say we've probably seen a lot more payoff requests and refinance opportunities than historically, with rates being so low. And I think the banks that are doing business are eager to get as many equipment deals as they can. I've talked to several of them in the last couple of weeks, and they're doing a lot of real estate, and they'd like to see more equipment deals. So those opportunities are popping up for us as well.
Awesome. Corey, how about you? What changes have you seen across customers, vendors, industries as well? And what are y'all doing to pivot, to use this special word?
Sure. I think uniquely in this group, Time Payments core businesses were, or rather are, restaurants, office, so really kind of our water cooler business, and security. So like the three things that got hit the hardest in mandated shutdowns kind of early in the year forced us to take kind of a real look at how we were supporting our vendor partners. We're mostly, predominantly rather, a vendor originated business, and finding new ways to help them, our vendor partners, serve the customers that were continuing to survive. So like Leslie, we implemented a COVID kind of funding standardization questionnaire, like, are you still open? How are you, planning to survive? Where are the opportunities that you're going to focus on? And in doing so, we're able to, like, from truly start to finish, rapidly launch a app to point of sale equipment financing and leasing documentation experience. So to help those vendors that are now trying to navigate through this environment, improving the both kind of technology and fraud protection that we have layered into our platform, but also that actual service level where a customer can visit a vendor's website, come to a vendor store, complete an application, get instant terms, and actually sign their contract all in web session. We were able to start from start to finish, deploy in a little under 60 days. It's a tremendous team effort.
Nice, go team. So that brings up a great point that I want to keep on, which is, Corey, obviously time payment, like you mentioned, has done some amazing work with technology. Leslie, have y'all had any changes on the technology front, or have you made any process changes within the company in order to help or to service your clients better?
So KLC as a whole we don't get very technical super fast. And thank God we did, because we implemented DocuSign before COVID hit. We outsourced all of our accounting before COVID was a thing. We upgraded our technology and our servers within the office, and really figured out really quick how to work from home and efficiently. And so as a company as a whole, KLC has been very gracious with making sure everyone can work from home and having every team set up that we need. But I think we got really lucky and had put all that stuff in place before COVID was even a thing. So I don't know what in the world we would do without DocuSign right now, because it's been a saving grace for us and made our customers, it's just been an easy process for our customers to be able to do business. So we, thank God we did what we did.
Nice. And Guy, I'm going to come back to you. You had mentioned that you are now doing some new screening questions, just so that we can offer some takeaways to our clients. Obviously, we have DocuSign and these big technology changes, partnering with vendors like Corey mentioned, and the DocuSign like Leslie mentioned. But you had said there were additional questions that you're now asking customers to screen them because of such an influx of applications where you don't think as many of them are as high quality. What are some of those questions that people could or should possibly add to their screening process?
Yeah, I mean, and they're nothing necessarily earth shattering, but what we're seeing is a lot of folks that are sitting at home watching The Price is Right. All of a sudden, their brother's out driving a FedEx or an Amazon truck, and they're like, hey, maybe you should drive a truck. And this is, being exaggerative, but of course, that's kind of how this goes down, it seems like. It's people that don't necessarily have experience, that are looking to do something because they're sitting on the couch without a job possibly. And good for them. They want to have an opportunity to better their lives and to get their own business started. But what we're finding is they don't have experience. So we're asking about their industry experience. We're asking about their discretionary funds. Unfortunately, a lot of these folks, when we ask for their bank statements, are running on fumes. So there's not even enough to pay for a doc fee at that point in time. So we want to see the bank statements. We're also making sure that you talk a little bit about their credit, seeing what that's all about. So it's nothing necessarily different than we would normally get or ask. We're just finding out a lot more up front before it gets too far into the process and wastes a lot of time internally.
That makes a lot of sense. So I guess we've talked about customers for a minute, and then we'll probably come back to some of that. But I definitely want to talk about also what changes have you seen across the lending environment from the lender side, the bank side, and again, how's your company managing those changes? So I was going to say, Guy, you want to kick us off with that, kind of where you've seen changes with the lenders and what you're doing to deal with that? Yeah,
and so where we've seen also, while the applications, there seem to be one extreme or the next lately. There used to be a lot more middle ground that we're experiencing with our applicants. Now we're seeing some really tough ones, some really bad applications, or some really strong ones. And so with those lenders that we used to rely on in that middle ground, it was a real challenge because nothing was fitting in their box. But thankfully, we had enough sources that offered some really good A credit programs, and we were able to get them across the finish line. So where we'd seen I'd say the lenders adapt is everybody was looking for COVID statements. I know Leslie had mentioned that earlier, so that was real important. Definitely wanted to look at the bank statements to make sure that they qualified. I want to make sure that in looking at the bank statements that they were getting some government assistance either through the PPP or another SBA program. How is that affecting their cash flow and where they are with their budget constraints and restrictions? And so we just wanted to make sure that there was with our A credit sources, they were able to accommodate the request and not feel like they were going to get it over their head, especially because there was so much uncertainty, and there still is, but it seems to be getting a little bit more stable. But we just want to make sure that everybody was on the same page and really understood the transaction.
Awesome. Corey, what have you seen? I want to make sure I have this right, but I know Time Payment has, like you said, you have a lot of vendor clients, and then you also do a broker segment of business, and you also syndicate. What have you seen as far as changes in the lending market?
Well, I think, we hear the general, conversational terms like COVID. Everybody's sort of like tired of it, and you're watching it happen in the lender community. Like early on, there was a March, April. There was a significant just stop to funding where everybody trying to figure out, okay, where do we go next? How do we manage this? What's going to happen to our portfolio, both kind of internally and with much of our partners. And now, though we're continuing to see, getting oil delivered, apologies, just happens to be right now, and directly outside of my office. But we're all in the business of deploying capital and finding good, quality streams of payback, and we're now seeing, just in spite of the fact that we're in record numbers of new cases, seeing the capital market trying to find new ways to spur new applications, find those good applications. I completely agree with seeing the same thing that we talked about. So it's one extreme or the other. It's the great borrower, the strong operator who's figuring out how to navigate, or those grasping at straws. But we're now seeing capital market shift to bring back things like deferred payments and trying to find good ways to deploy capital. Because if we can't do that, none of us are in business anymore. So finding those good operators and those good applications and spurring them to find the opportunities to help them grow or help them pivot through navigating this is each of our charge.
All right, I'm going to pick back up on that for a minute. We have a question from Randy. He says and I'm going to give this to you, Corey, and then Leslie and Guy, we're going to come back to to talk about the marketing stuff and some changes and how to generate more and hopefully better quality applications. But Randy's question is, during the last turndown, many broker lessors found that credit got tighter and spreads improved. Deals that were done during that time frame really performed well from a stop loss perspective going forward. Do you feel that we could see the same situation reoccur? Corey, you got an answer on that one?
I think that question comes to is there going to be another round of stimulus from government? We saw significant kind of portfolio performance. And if you look at the sort of macro credit market, like after the first round of stimulus, there was like a few $1 billion of credit card debt that got paid off really quickly. Like, and if you look at that on a trend line, like there's never been a behavior like that before. We saw it in our portfolio. Lots of people used PPP and Main Street loan stimulus money to satisfy their debt. So I think much of the good performance, like there was lots of restructure that happened across the board as well, but the good performance is a direct function of the helicopter money that got dropped around the economy.
Awesome. That is very true, and what a good perspective. Leslie, I want to take it back to you for a minute. What changes or what are you doing now in this unprecedented time? Changes to marketing or generating new business and customers. I know earlier when we had kind of our prep call, you had mentioned that you were still visiting clients. Is that something that's still happening now? And kind of how are you changing or not changing your marketing in order to generate more customers and hopefully some better quality applications?
So starting tomorrow at midnight, Minnesota is kind of doing another shutdown. So that's going to change how we market and network in Minnesota for the next 4 weeks or who knows how long. But up until then, yes, definitely still seeing customers, staying in front of banks and vendors. I mean, we as a company are a 100% referral-based business. And so all of our sales team has had to get out of the office as much as or their houses, as much as they feel comfortable with. And, you know, people really want to talk and they want positivity. And there's a lot of negative crap in the world right now. So if you can show up and bring them donuts or candy or something and just say hi, it goes a long way. And even if you can't be, you know, right next to the person, at least, you know, they know you're there and they know you care and you're not just looking for the next transaction. And so we as a company have done I think a really good job through this, staying in front of our customers, staying in front of our vendors and our banks and making sure that people know we're here, we're not going anywhere. Done, you know, millions of deferrals, but we're willing to do that for customers to keep them in business because it's not their fault that this has occurred. And so I think just staying present and staying positive really will go a long way with anybody right now.
Yeah, I definitely think positivity is a prescription for yes, a more effective marketing in general. Guy, what about you? Any changes to your marketing or to your marketing approach that have been helping you deal with the situation currently?
Well, one thing we've always been big on is making sure we see our vendors. Obviously, there has been some changes to that with COVID. And depending on where you are geographically, it's even more restrictive. So in the Southeast, it hasn't been as restrictive as other parts of the country. That's good for us, obviously, and at Streamline Financial, who for working in and around the, you know, Georgia, Mississippi, Alabama, these southeast states. So we are always out seeing our vendors. We're still able to go see them, shake hands. We do a lot of auctions. They're still doing live auctions. Yes, there are some restrictions, but it gives us a good way to still interact with our vendors that show up on site. I have a rep in Ohio. He's been a little bit more restrictive. He can't get out. He hasn't really been able to get out to see people face to face since March. So you have to rely on the old school, picking up the phone and still making calls, making sure they know you're there, making sure you know the products that you have available. And one thing I always tell any of my reps, and this is going from a vendor side, but it goes across even on the customer side. And I'm going to use an old cliche because I work out a lot. If there's no pain, there's no gain. Well, I always say if there's no pain, there's no change. If there's no reason for your vendor to make a change, then they're not going to. You have to find the pain. You have to uncover where the need is. And in order to do that, you've got to be talking to them, whether you're doing Zoom conferences, which I'm not a huge fan of these yet, but we're getting used to them. But any way you can do it, Zoom, phone call, some way to make yourself known and relevant and different than somebody else, because we all offer financing. You got to make yourself stand out, and we do a very good job of selling against our competition. And so you just got to make sure you're touching your customers however you can, whether it's physically or through any other form of marketing or advertisements.
May, if I could add to
Right.
that, I would just say that it's I think it's really important to talk to your customers, your vendors, your clients, whatever, about anything besides work. Just get to know them, get to know their families, get to know what their favorite football team is, even if it's the Falcons. Get to know what is important to them and what makes them happy and smile. And I'll tell you what, I've gotten more business just by being friends with people than I have by, any other form of marketing. So I think it's just important to be real with people, that they definitely can see through fakeness. So get to know them.
Nice. I think those are all great tips. A couple months ago, like early on when this pandemic started, I was part of a different panel where we talked about kind of how to pivot, our favorite word, with your marketing stuff. But I think what it came down to, and I guess the panelists, actually Corey's one of the panelists, Matt Mosley, and then Stephanie Hall. And I think one of the main things that we talked about was getting back to basics as far as sales goes. Corey, do you want to touch on some of those sales basics that I think Leslie just hit on the be honest, and I think Guy just hit on the follow up. But Corey, do you want to clean up on the basic sales stuff, just to remind people that this is a good time to get out and do that?
Yeah, I mean, Guy, Leslie, I think you hit it on the head. That build strong relationships, be in front of your customer, and understand what their business is, what is their challenge. To Leslie's point, be real on the personal front, but also it's not the phone call of hey, where's the next deal? What can I do to help you? That's you're not adding value to that prospective vendor, to that customer. Do you have another equipment purchase coming up? Understanding their business, be it vendor, be it customer, where are they trying to adapt, to manage through this? Are they trying to grow? Are they in trouble? And understanding kind of strategically as a partner, what can you do to aid them? And again, to the earlier point, we're all in the business of deploying capital, but thinking about it more as a partner to your prospective customer, be it borrower or vendor. You become much more a trusted advisor if you're helping them navigate what their problem is. And maybe that doesn't result in origination for you today, but you helped them figure out whatever that challenge of the day was, challenge of the week, month, 2020, and they'll remember you for that. So being present, being an active listener, and helping navigate that issue, kind of be it an original today for you or not, I think is all of our responsibility, and really a way to develop that personal relationship that I was talking about.
Right, and to bring back up what Guy said, which is, what was it? It's no pain, no change. We are everybody's in pain right now. Even Quality's had an absolutely fabulous year. It's still, there's pain points have been on the growth side for us, managing that. So even the companies that are doing well are still have pain points, and it's just really, like you said, like Corey said, making them partners, and like Leslie said, just being real about it. So I think that was a great little bit. Scott Wheeler sent us a question on the chat. And since there are a lot of changes in the market, what opportunities have you seen or do you anticipate in 2021? So, and as we get into the end of this fourth quarter, people are definitely starting their planning for the next year. Does anyone want to volunteer to field it, or do you want me to call you out? All right, Guy, you win with that smile. What changes and what opportunities do you see or do you anticipate in 2021?
Well, if I had a crystal ball, that would be a good time to use it right now. I don't know what in the world 2021 is going to bring. I think we're all just on edge, determining many things politically and otherwise. Again, thankfully, our business has not changed drastically. I hope it remains the same and continues to grow and prosper. I think a couple obstacles that we may run into that we're going to need to overcome is a lot of our customers who did get large SBA loans. They were utilizing that to buy equipment. I know a lot of our customers are sitting tight on maybe pulling the trigger on another transaction or a piece of equipment they were going to buy because they just don't exactly know what is going to unravel in the next few months. So we just got to adapt to it as it comes. I don't know that there's any right answer to it, but it's just all about understanding the market, being alert, being aware of what's happening around you.
Nice. Leslie, how about you? Any predictions or anticipations for 2021?
Well, we did. I did a lot of business in the family entertainment world, and I can tell you that market is definitely gone away or changed. And so, just trying to figure out a different avenue. I would say manufacturing, construction is up in our area. Robots seem to be a thing that everyone is interested in talking about. I would, one thing that actually Spencer has encouraged us all to do is join as many associations and go to as many Zoom things as you possibly can right now and get your name in front of people, because it's cheaper to get involved right now. You can go to some of these trade shows or, Zoom things online and get to meet people that way. And so just, I guess, like I said, I don't have a crystal ball. I wish I did. I'd be a bajillionaire, but I think just trying to stay relevant, stay in front of people. One thing I would add about the marketing thing that we think is important is if you're in the family entertainment business and you see something that pops up on the news or an article or an event that's coming up, share it with your customers, then they know that you're engaged and you're knowledgeable about their industry. So whatever the industry is, but I don't really know what 2021 is going to look like. Hopefully my kids are back in school and not me teaching.
Yes, I say that as a kid just walked into my office. I agree. So Corey, do you want to share any thoughts or predictions or anything you anticipate for 2021?
I think, last time we were actually at a NEFA event and we were on the grotto at Caesars, David Lee asked him a similar question, said it best, like, yeah, if I knew that, my house would look like this. But for us in time payment in the vertical markets that we can have as primaries, the restaurant, for example, people are still going to go eat. We watched everybody pivot to go orders. We watched ghost kitchens start to be kind of a new term that everybody talks about, and at least in this industry. Watching every kind of franchisor pivot their model to support that kind of business. So I think particularly in the restaurant sector, there's like a giant equipment purchase cycle about to happen as everybody pivots their model to support kind of what is the new. Burger King's revamping every single drive-through digital menu boards. Everybody's putting touchless pay systems in place, and that's not just in the restaurant; that's across the board. So I think there's lots of opportunity in every sector as the market is adjusting to figure out how to survive. So in the wake of change, there's always, for opportunity and to, I think, Leslie's point on participate as much as you can and in associations, in the news outlets that are relevant for the organizations or the industries that you participate in, rather, to identify on what's coming up next, so you can be, at the front of that wave.
Awesome. Awesome. Thanks. So I think that you've just made a really valid point. And that is that almost every industry is having to pivot. The ones that really got hit hardest are going to have to change their whole model. And so that's definitely unusually enough to go to it seems unusual to go to the place that's hit hardest, but then it also makes sense because here they're going to need to have a whole new model and new equipment. Obviously, a lot of us, I mean, we are all, I don't know, Guy, you actually look like you're in your office, but the rest of us are not. And a lot of people, as you said, Leslie, a lot of construction, people are moving away from the offices. And I think that we can look at infrastructure, construction, heavy equipment, and kind of those maintenance businesses, even obviously Quality does a lot of titled stuff, but even those work trucks and things for, the window repair guy or there's some kind of smaller markets that with everybody in their houses more or around their neighborhoods more, you're probably going to see a surge in that kind of business. So I think, sorry, I'm not a panelist, but I'm adding my 2 cents on 2021 here. I think that really putting your brain on what's going to happen next is always a great idea, kind of looking at what needs to change and then figuring out how to be ahead of that market. So back to the panelists, sorry. I was going to say the current virus case numbers keep moving up, obviously, and we're also moving into the holiday season. Does anybody have any tips, at least for finishing out this year strong, or anything that you want to add as far as tips to at least make 2020 as good a year as it can get? Leslie, any additional tips while we're headed towards the end of our hour?
I would just say keep plugging along and keep talking to people. If you do a lot in the restaurant business, I mean, like I told you, Minnesota, as of tomorrow night, we won't be able to go to restaurants, only takeout for the next 4 weeks. So I'd reach out to your restaurant customers, tell them, hey, I'm here for you. I'll buy a gift certificate. I'll do whatever, just show them support. And I think that'll go a long way when they can reopen. I think just don't give up, stay positive, and keep selling, keep hustling.
Nice, I like it. Guys, any tips on finishing 2020 strong? Any?
Nothing much different than Leslie said. I always use another cliche expression: just keep your foot on the gas. Make sure you're always contacting your customers, contacting your vendors, making sure that when you do reach out to them, that you're giving them some information other than, like Corey said earlier, send me a deal. That's not what they want. They want you to bring some value to them of why they're going to send you a deal. So you got to make it relevant. You got to find their hot button. You got to give them a reason to, if they're not already sending you something, to reiterate maybe something recently that you've done for somebody else that makes them realize, oh, you know what, maybe this would be a deal that's applicable to send over to Guy or the team at Streamline. So whenever you're talking to them, again, get to know them. I know Leslie mentioned that earlier. That's kind of very important to know your customer and your vendor relationships. But find something that is relevant to them to get them to realize something that they may not have been doing that's going to allow them to change, to send you a deal that they may have thought otherwise not to send you.
Awesome. So speaking of sending stuff, are y'all planning on sending holiday cards or gifts, or do you do a end of the year push with your clients? And if yes, are you changing that marketing approach at all? Guy, you want to start? You're on the big screen.
We do, I guess because we see our vendors so often, we usually do. This year might be a little different. We're always bringing them something, whether it's Yeti. I feel like I should have stock in Yeti because we buy so many Yeti brands of cups and coolers and the things they offer that you can brand. It's not inexpensive, but it's a great way to market your company. And it's something that, especially with my customer base, being in and around construction and transportation, they can never have too many Yeti products. So we're always sending out those type of gifts to make sure that they're, knowing again that we're here for them, and that we're showing appreciation by sending them something nice that is applicable to something they can use in their everyday life.
Nice. Leslie, how about y'all? Do you have a holiday marketing plan?
Yeah, so we also give away Yeti cups. Thanks for stealing our idea, guy. Kidding, we just started. So we have some cool Yeti branded coffee mugs, tumbler things that we're giving out to local, people that we can drive and go see, or mailing them out to our top referral sources or whoever. Salespeople are stuffing them with candy, hot chocolate, gift cards, whatever they feel the need to do. We're mailing out Thanksgiving cards and giving some incentives in there for anyone that refers over a deal or we do a deal for. So that's just encouraging business. And our holiday party, unfortunately, was canceled this year. I was really looking forward to that, but we'll probably have a Christmas party in April. It'll be great.
Well, Leslie and Corey, you're going to get a Atlanta Falcons Yeti cup from me.
Oh, yay.
So,
return to sender.
Return to sender. That's awesome. Paul, my boss, Paul, asked the question, which I'm going to send. This one is less fluffy, so I'm going to send it over to Corey. Do you see credit markets tightening in the coming months?
So I think to a comment I made earlier, like prospectively, it's I think a one-to-one function on another round of prospective stimulus into the economy. As I think the Pfizer news this week, the Moderna news of the efficacy of the new vaccine is kind of a giant boost to the general economic perception of the future. And the big question now that kind of nobody's really talking about is how fast can we actually get distribution to enough of the population to have it make sense, and what that time horizon is going to look like. If the shutdowns continue for the next 30, 45 days across the states, I mean, Chicago is kind of earliest, and now we're just watching the ripple effect. We're getting the talk track that everything's going to be localized and we're not going to see some sort of federal shutdown level, and I think that's true, but I think the rate in which we see the local shutdown start to impact giant parts of the economy will drive the credit markets to tighten just out of sheer uncertainty. I think that's going to come from, and again, unless there is the same level of protection, for lack of a better word, from the Fed and the Treasury down, where we all enjoyed the benefits that were granted from Fed and to everyone's warehouse, where you kind of actually saw it, felt it, or were part of it. Like the Fed said, no, don't worry about paying us, right? And that dripped through every warehouse, where like syndicates were saying, we'll work with you. They didn't have that pain. They didn't have the stress of funding their warehouse or the Fed back or their securitization. So if we are fortunate enough to continue to kind of enjoy that level of flexibility, then credit markets will stay open. But if not, it's going to be a tough 6-9 months.
All right. Hopefully it won't be a tough 6 to 9 months. Thank you, Corey. So we have another question, Guy. I'm going to send this one to you from Andre, new dad on the block, Clifford. He says, is referencing IRS section 179 still a good selling point?
I would say yes, of course, it's a good selling point. I don't think we probably use it as much as maybe we should. So I don't know if that's a good or bad thing. It is always something that we discuss, but we don't necessarily blast the market or our vendors with it. I think most folks are already aware of it, at least the ones that we interact with. So it comes up more naturally. I don't know that we're doing any specific campaigning for it, but again, maybe somebody else who has a larger marketing team than we have can maybe tell me if I'm missing the boat on that.
Mm-hmm. Leslie, do you have an opinion about using section 179 as a selling point?
We usually do a marketing blast about it, right around the fourth quarter, just to remind people of what's going on. Like I said, I mean, people usually are just naturally bringing it up as a conversation because they're sophisticated and they know what it is. So, I mean, we don't do anything crazy, but we'll send out a blast about it.
Excellent. So I know, Leslie, I know KLC holds some of their own paper, and I just at Quality, we've started to see kind of a second round of people struggling with the, like Corey had said, it's kind of on this like smaller level in each area, the cities, and like you just said, Minneapolis is locking down now. Are you seeing
state.
what is the whole state? Oh, okay, yeah. So Minnesota is locking down now. Are you seeing a influx of deferral requests again?
Well, you probably just jinxed me. So now the phone will probably ring all afternoon. It definitely in the industries that have been hit the hardest, like I said, we've done a really good job of accommodating as much as we possibly can. At this point, we are asking for the proof of what they did with their PPP money. We want to see their bank statements. We want to see a little more information than the first go around. But definitely if they're in the family entertainment, they're in the restaurant business, they're a dry cleaner, they're in, geez, I can't even think at the moment of other industries that are hit really hard, but any of those type of people, I mean, they don't have a choice. Like we got to try to figure out as much as we possibly can, how we can work with them and make it a little less hurtful than unfortunately where they're at. So, okay. But now if my phone rings, I'm sending them all to you.
I'm going to transfer them somewhere else. Return to sender. So, all right. So we're down to about 5 minutes left here. And I just I guess considering the audience is here because they want to see kind of what our opinion is or what your opinion is on the next steps. Can y'all give the audience maybe one or two industries that they should consider looking into for various reasons, as far as targeting those industries or finding some way to be successful in those in a couple of industries that you think are going to be okay or better or decent in the next couple of months? Leslie, you want to start? Oh,
I don't want to give away all my secrets.
All right, how about one tip, because that's how you get on the panel. You got to give one tip. I think
if you just look around on the things that you are daily using at your house and think about where those stem from, like coffee, for example. I mean, more coffee is being drank right now than ever before. And I think if you think about, the whole process of the coffee industry, think about a vendor that markets to a coffee, like a Caribou or whatever. I mean, think about where the coffee comes from and dive into that. I mean, I think alcohol and coffee are two things that are flying off the shelves right now. So think about where they come from and figure out a vendor that's connected to them and go after it.
That's brilliant. Definitely the go with what you know theory. Guy, now you have to give away a secret.
Yeah, so generically, I'll kind of spin off of what Leslie said, which it seems obvious, but it's true. I mean, work trucks, light duty to heavy duty. Everybody needs them in some form or fashion, from delivering the coffee or the liquor to delivering Amazon boxes and everything in between. The downside is the inventory is, I think, going to get a little bit low coming up here because of manufacturing, but that may be an upside for the vendor selling it because they're going to get a premium on it. But regardless, like Leslie said, something that people use every day that they need financing for. And again, it's obvious, but there's cars all over the road. So they're going to be needing financing.
Awesome. All right, Corey, give us a hot tip. That's
I was just going to go get it to my photos. And Leslie mentioned earlier, automation. Lots of places are trying to find new automation technology to deploy. We just partnered with Miso Robotics. It's a company that makes an automated filator, attendant, and hamburger flipper. So in the wake of, or rather, as people are pursuing the no-touch service, for lack of a better term, everyone's trying to find new automation opportunities in their business, and whatever, restaurant, food packaging, workforce, and the work trucking space, flying out electric and automation technology in those spots. So automation.
awesome. All right, all three of you, those are great tips. All right, NEFA, thank you for letting us share our knowledge. Stephanie and Andre, thanks again. This has been a wonderful virtual conference. Corey, Guy, Leslie, I love and miss you all so much. I'm so glad that y'all could join this panel. And hopefully sometime in 2021, we will all get to have a drink or have a chat together. All right, everybody, thanks again. And I don't know how the sign-off policy goes.
Thank you, May. Thank you. Thank you so much. Thank you to everyone on this panel. Leslie, Guy, Corey, May, thank you for leading this conversation. I love the messages I heard today, especially the one to stay active in your association. So always think NEFA first. Please, when you sign off of here, join us for the second panel that we have going on today at 2:15 with credit underwriting. And we look forward to seeing you all there.